Hey everyone, welcome back to my channel. So we are in part 3 with Matt Brighton, property entrepreneur, YouTuber, and so much more. And we're learning a huge amount. So if you haven't already, go back to part 1, check out part 2. So much to learn, so much value that Matt has given. I've taken away huge amounts, Matt. But this part 3, we're going to be talking about property, alternative investments, what else you're involved in, and entrepreneurship as a whole and everything like that. So starting with property, where is Matt Brighton at the moment when it comes to property, and what's the long game with it?
So I play the card of a beginner at the moment. I think I'm the newbie in the industry and just kind of learning the ropes as I go along. I'm a firm believer of just kind of doing it and taking the action and just figuring it out as you go along. The one big thing I've learned about property is that there are loads of problems, but as long as you're happy to solve problems, nothing is impossible. I think that's true for a small project and a large project. It's just essentially a scale of complex versus simple problem solving between it. So in terms of where I am at the moment, so I guess I probably spent about a year to a year and a half of just learning stuff, soaking it all in. So watching tons of YouTube videos, podcasts, magazines, blogs, websites, loads of stuff. And I've just purchased and going through the conveyancing for my first buy-to-let, which is going to be it's a small flip, because at the moment the market is incredibly hot. It is relentless and brutal out there. I managed to find a property that is worth about 130k done up. Bought it, or put an offer at 106. Originally offered 100. The seller rejected it, and then he actually came back to me and said, can you offer 106? And I said to him, well, I'll do 100 on the bridge, I'll do 106 on a mortgage, and he chose the mortgage. There's about 8.5k profit in there. It's not huge, and if you do return on GDV, it's something like 6-7%, not massive. But I'm looking at this as a 2-year project, so it needs about 10k spending on it. So after I've got the house, hopefully the next month and a half, 2 months, spend 10k doing it up, and then I'm going to get a tenant in for about 2 years. And when I factor in the 8.5k on day 1 profit from the refurb uplift, plus then the net rental profit over the 2 years as well, a little bit of capital appreciation as well, it actually bumps it up quite a lot. Now, people work out return on investment like 100 different ways. If I factor in all of those costs and just look at it as a total project rather than day 1 flip, it should return about 30% a year.
Amazing.
Which is on the cost, not on GDV, which is still really strong, which means I would turn a 40-ish thousand pound investment, get about £26,000 profit overall from capital appreciation, from rental profit and the uplift, and that 40k turns into 60k after 2 years, which is awesome, which is more than what I've ever got in the stock market in a year. So working on that at the moment. I've still got a little bit of spare cash from some of the YouTube stuff, which I'm hoping to put into a flip either at the end of this year or maybe start of next year. And I'm also working with a local council near me on 2 small plots of land.
Oh, wow.
Because I would love to get into development. I'd love to build 1 or 2 houses on a small plot of land and really get into that side of things. So I'm talking to the council about an off-market, 2 off-market pieces of land that could be nice for 2, maybe 3 homes at a push.
Wow.
Nice small project, easy to buy the land and then do the development finance off the back of it. And hopefully, depending on how it works with the lenders, if I can prove I can manage a small refurb project, that should be at least a stepping stone to then try and convince a lender to get development finance to build 1 or 2 homes and kind of build up from there. A bit of a jump from a 10k refurb to a 100, 200k home, but I think you have to try and take those leaps somehow and somewhere to do it. So that's
amazing.
where we're at the moment.
That's amazing, really exciting. And actually, I'm sure we'll talk off camera, but when it actually comes to investment, make sure you come speak with me, because that's what I deal in. So that's amazing stuff. And with the long-term game of property, I suppose a question that may come up, people might be sitting there thinking, well, in fact, I know this is going to come up, is your education is done first. So a lot of people are spending time on YouTube. Education is the first thing. Normally the second question that comes is, but where am I getting the money from? So, how did you start with your capital, or have you just been a saver, or, where have you originally got your capital to put into your property? Because everyone's always wondering, where does this money come from?
Yeah, there's so many different ways. I think there's probably 2 halves to that. One is getting started, and the second is keeping the hamster wheel going. So in terms of getting started, property investing is called investing for a reason, because you need something to invest into it.
Yeah.
And, you see a lot of the property gurus kind of flaunting no money down deals and all this kind of stuff, which does exist as a very kind of rare thing. But it was more prevalent back in like 2008 during the crash. In 2021, it's very different. You don't have these sellers looking to give away houses for nothing on lease options and all the rest of it for nothing. It just at the moment just doesn't exist. It's not possible unless you're extremely lucky on some kind of rare off-market deal. But I wouldn't put all my eggs into that one basket. So I guess what I've done, I've always been a saver since I was like 16 years old. I was saving and saving and saving. I had 5 different jobs in university. I've freelanced. I've been a graphic designer, a web designer, an SEO expert. Obviously now I do the YouTube stuff. I sell products. I have all these different revenue streams. But the one big contributor was actually buying my own home first. So I bought a shared ownership flat in London, which a lot of people will say, hang on, shared ownership, that's a terrible idea, and it's a new build as well. So in theory, on paper, I've done the worst things you could do when purchasing property, but it worked really well because I've got 2 bedrooms. So with shared ownership, you obviously pay your service charges, you pay rents to the housing association, and then you pay the mortgage, so it's quite expensive. And the total costs are about £1,800 a month for a 2-bed, which is quite standard in terms of, I guess, rent in London as well for a 2-bed in East London. But I rented out the spare room, so I got permission from the housing association. So I rent out the room for just over £1,000 a month. So that essentially wipes out the cost of the rent and the service charge, and then therefore I have a 600k flat in London that costs me the equivalent of £400. And my unfair advantage there is that because I work for a bank, I have a staff mortgage, so I pay 0.1% interest, and that's it. The rest
this isn't for everyone.
But yeah, unfortunately not everyone can get this. Which is an awesome product, which means I pay £15 a month interest and £400 actually on the capital, which is really good. So low expenses, that's what I really focused on, was how do I lower my expenses first, which means then I've got a decent job and can save more of that salary as possible. Part 2 was cool, I'm kind of creating the money. What do I do with it now? So I'm not huge on these extravagant ways of investing. I just kind of put my money into Fidelity, into a tech fund, and that tech fund has been returning about 25% a year. So I was kind of piling about £1,500 to £2,000 a month into Fidelity. This is a stocks and shares ISA, so also tax-free. Max out the ISA every year, and when I looked at the total portfolio over about a year and a half, 2 years, I think I've made an extra £15,000 to £17,000 just through the gains in that. And that was completely passive. It's a fund. I didn't have to worry about it, manage it. I just kind of put it in, pay low fees, and I turned what would have been probably 40,000-50,000 into more like 65,000, 70,000, including all of the gains and selling them off. So that's how I kind of build it up to the point where I am today. And then I've got the YouTube stuff, which is now like helping to add more at the kind of top of the funnel, so to speak. And I kind of just create these streams and have savings from the salary. Try and reduce the expenses because it's too easy to buy a nice fancy car, and just really up your expenses, because that's going to eat into your, I guess, timescales to invest in the long term, and just keep on saving the pot. The second half of it is when you've got the cash. That's how I'm getting into the first deal. The thing that I'm doing in the first property that I'm very well aware of is I'm putting a lot of cash into it. I'm putting 40k into it. It's going to be tied up for 2 years now. Any good property investor will tell you that's a bad thing to do, because obviously what you want to do is make sure that you're kind of recycling that cash as much as possible, and that's buying at the right price, that when you add the refurb, you're leaving 10k or less in the deal, so that you can kind of keep that momentum going, because otherwise property investing is very capital heavy. You need to invest lots of money into it. So the way you get around that is by working on deals that either you can refinance and pull as much out as possible and go again, or sell it and kind of boost the pot. But at the moment it's a hot market, so as a first timer it's not easy to do that. They do exist, but they tend to be also the bigger deals that need a lot more cash up front. So I think start small, celebrate with every single investment, and there's always its long-term thing as well. So that's where I am and kind of what I'm aiming towards at the moment.
That's amazing. So takeaway that should be is lower your costs, lower your outgoings, save hard. I love the way that you keep it simple. I'm like a real big fan of just keep it, Fidelity fund, stick it in there, let it grow. It does what it says on the tin. So they're amazing sort of tips and value that everyone should take away. And when it comes to alternative investments, and I suppose finishing on the entrepreneurship of that, which ties in, is there anything you're interested in investing right now that's kind of out of the circle of property and a fund? Is there anything that?
So I've tried my hand in crypto. I'm not a huge fan of it. It's so extremely volatile. I'd rather put my money into the tech companies in San Francisco than I would in SafeMoon, Shiba. I'd have like a little bit in Bitcoin and stuff like that. But the problem is the market is so volatile. It goes up and down, and it takes a good year or two to recover. So what I want to do is put too much money in and then lose it. And I, many years ago, I did a video about this. I put £35,000 onto Bitcoin when it was
Wow.
4 or 6,000 US dollars.
Wow.
And then it went up to 20. So I turned what would have been 30-40k into about 80-90k. And then it crashed, and I pulled out at the point I put it in and almost lost it all. So I've learned not to put all my eggs in one basket.
Yeah.
That's one big learning
Yeah.
there. But otherwise, I mean, now I'm kind of keeping it simple. I'm investing in, I really firmly believe in the big tech companies. There's so much money in San Francisco and Silicon Valley, and that's where a lot of my gains have come from. And then the other one is just the traditional asset-based lending and investing, which is property, and it's feels quite foolproof. It's been around for many years. It's proven. And it's an exciting industry as well, so I'm kind of looking at those. I could argue that I'm investing my time into things like YouTube, because obviously YouTube didn't pay at the start, but I think by investing time in there, that's now returning. And if I said, well, and I think I worked out my hourly rate on YouTube is now, after the income, about £16-17 an hour, which is not bad.
Which is brilliant.
Yeah, people, I worked for free for 6 months, but then made 10 grand in a month, and it instantly paid
It's
it all
long
off.
term, isn't it? It's not for the short.
100%.
That's amazing. So, coming to a close on part 3, for any entrepreneur watching this at the moment, what would be your top tip for those looking to start in anything that we've spoken about, property, YouTube, whatever it would be? What would be your kick up the backside to get them going?
I think the main thing is take action. One thing that I've been a really firm believer in is it's Atomic Habits by James Clear, fantastic book, and it's really all about when you set a goal, instead set the habit. So how are you going to get there? And it's if it's in property, you need to be making 5 offers a week or 5 offers a month, whatever it is, and make sure you hit that, because that's how you're going to make progress. If you want to create a product, make it a habit to work on it 1 hour a day, and by doing that, that's where you'll start to see it, because the only way you're going to start is by getting stuck in there, make the mistakes, find the problems that you can work out and problem solve in the future, and things will start to happen. Because if you're not creating the product or offering on properties or creating videos on YouTube, then you won't see the results. I think a lot of people fall foul of that. So just start, just do it, wing it, just kind of go along with it, and at some point you'll start to see that kind of compounding growth and change that where that's where you really start to see the results, and just go out and do it, really.
Amazing. Well, I've loved interviewing you, Matt. I've taken away a huge amount, and just to close off, if people want to find you, get in contact, where can they find you? What are the links?
Cool. So you can check out my YouTube channel, which is youtube.com/Matt Brighton. You can also find my website, which is wtfpropertyinvesting.co.uk, or on Instagram, which is mattbrighton_.
Awesome. Thanks for joining me, Matt, and until the next time, I'll see you all very soon.